What's up guys, welcome to episode 2 of the EP2 Beginners Trading Bootcamp. In today's video, I'm going to be talking about trend, how to identify trends, what are market conditions, how does the market move. So now that you understand how to read candlesticks, you understand bearish, what a bearish means, what bullish means, trend is either bearish or bullish. If price is moving to the top right of the screen, we are bullish, aka green. If price is moving down to the bottom right of the screen, we're bearish, aka red. So that's the easy way of identifying trend. Now let's go over something that's a bit more mechanical of determining what the trend is. So trend means we have structure. So structure consists of multiple candles. So on a chart, ignore the coloring. They're not going to be accurate, but on a chart, you guys know we have candlesticks that move like something like this. I recommend, honestly, before you even watch any of my videos, at least open up a candlestick chart and just get yourself familiar and seeing how price moves when it's printing live. Just for a little bit. That's all you need. But you can see basically the gist is these lines I'm drawing here are just a collection of candles, right? This is what candles look like. This is what trend is. Hope you guys get the gist here. This is called a uptrend. People call it a bull market. I call it just bullish. We're going to the upside. Now, this trend here, how do you determine this mechanically? Well, it's very easy. You have structure, also known as market structure. So today's video, I'm also going to combine trend and market structure because they are directly related. When we look at price, we look at highs and lows. So when I'm looking at highs and lows in market structure, I am looking not at every single candle high and low, because I remember we talked about every candle is high and low, but that's not what I'm looking at when I'm looking at structure. I am looking at swing points. Swing points consist of multiple candles. You can see we have roughly 5 candles here. It doesn't have to be 5. It could be any number of candles that represents a solid size move. That comes a little bit from experience to determine if it's a big or small range. Nonetheless, swing structure is consisting of multiple candles. And so when we look at multiple candles, I'm looking for the lowest candle for the low. The highest candle of that trend is the high. Lowest, highest, lowest, highest, lowest, highest. This is how I determine structure. So what do I call this? We call this is a low, this is a high. If we're bullish, we should be breaking highs. Like this. Price should be going past previous highs. We should be maintaining higher lows, higher highs. Higher low, higher high. Right? Higher high because this high is higher than the past high. This higher is higher than the past high. Why is this higher low? Well, because this low is higher than this previous low. This low is higher than this previous low. This low also should be making that higher high. Otherwise, it's not as significant to me. Ideally, you want to be looking for lows that break structure. So these are called BOS, breaks of structure to the upside. Higher low, higher high. That's bullish. Now, I'm not going to draw the candles anymore or candlesticks. Let's get straight into it. This is a lower low in a bear scenario, meaning we're going down. Higher low, lower high. Lower low, lower high, lower low. Does this make sense, guys? Lower low. There's probably going to be a low here. Lower high. This high is lower than the price here. Previous high. Lower low, lower high. Lower low, lower high, lower low. What do we call these breaks to the downside every time we break structure? BOS, aka breaks of structure. So this is what it'll look like. If I draw it, usually you guys will see this in my trade recaps. I call it BOS, breaks of structure. That is basically the gist of trend, how to identify the easy way versus the mechanical way, just based on higher lows, higher highs. Now, another thing you want to keep in mind with trend is it's not going to be that picture perfect when you're trading live. All right, go on the candlestick chart here. Can you determine trend here? The best way I recommend is even using a line chart. If you're not familiar, go to the higher time frame. Less noise, use a line chart. You can see structure here much more clearly with a line chart. This is what I actually used to practice all the time and do back when I was new to trading. If I can't determine trend, I use the line chart option style in TradingView. Take advantage. This clears up everything, clears up the noise until you get familiar with understanding how to read candlesticks. I know in the beginning it's really not easy, but I'd say within a few hours you should be able to read candlesticks perfectly. As you can see, we have a high, we have a low. We have a low here that broke, so this is lower low. Now this is when trading gets complicated, and why I said what I drew there is just an outline or rough sketch of how trend works, because you can see there are multiple highs in the market. There's multiple lows. There's even lows here. There's even lows here. How do you know which high or low to be using, right? This is something that comes a little bit with the experience. There's also a mechanical method I'm not going to get too in depth into because it's a little bit more advanced for the advanced course members. They will understand much better because it also adds something what I call inducement. You must have heard this word in my trade recaps. Not going to go over that, but essentially you want to look for the prevalent, more obvious swing points. So something like, you don't really want to look at something like this high here and this low here. You don't really want to look at this. You want to look at something more prevalent like this high, this low, this high, this low. If you don't even want to consider that low, you can consider this as the more prevalent low, this high, this low. See, you see how the high I'm picking is a high that breaks structure. This high I'm picking breaks structure. This high I'm picking did not actually break structure here, but it's a big move. Again, I don't want to get too complicated into explaining this stuff and distinguishing it, but you mainly would just want to focus on the bigger moves. Those are high and lows. You can see when we're bearish, we're breaking lows, breaking lows, breaking lows. There's lows here, there's lows here, breaking lows. When we're bullish, we're going to be breaking highs. In this case, we broke this high, but we failed to continue higher. So what does that mean? Price is going for this low. Broke the low. We even had an internal break here. So that is basically structure summed up in a nutshell. Going over how you can identify it. Use the line chart until you get familiar with understanding how to read candlesticks. I know it's not easy because I remember from several years ago, for me, it was very weird looking at like going from a line chart, which you usually see in either your college classes or high school classes, like a typical chart you see really in any academic field, compared to like a candlestick. It's going to look confusing at first, but trust me, put in some screen time, you'll get used to it, and this becomes a no-brainer. It becomes boom, 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 instant. It's going to become a lot easier, trust me. You know, most people don't take too long to figure or basically ingrain in their head how to read candles instead of a line. Because I remember back then I used to use just a line, but now I don't need that anymore. Because one great thing about candles is you can identify closures. On a line, you cannot look at body closures. On a candlestick, you can look at the exact opening price, exact low of each candle, exact high, exact body closure. On this line chart, you cannot tell where this duration of time, where the start was. Technically, you know where the start is, but hard to tell how price moved here, right? Just off the line chart. So that's why candlesticks are just so much easier, but practice that and you'll get familiar with candlesticks. Now, another thing to talk about with structure. That what I showed you was ideal structure. Now, what is true structure in the market? When you're really looking at bullish market, structure is going to look something like this. It's not going to be as clean, right? This is the true nature of the market. Now, we can go over liquidity. Actually, we'll go over liquidity in the next episode. Or actually, matter of fact, I already made a video on liquidity. So watch that video on liquidity. But to give guys a quick rundown on liquidity, since it does relate to market structure, liquidity just means swing highs and lows. Those highs and lows I was talking about earlier, those are liquidity points. What does that mean? When we take out those highs and lows, you can trade a reversal off of them. We tend to reverse off these points because there's a lot of stop losses being placed. So like, for example, took out this low, we eventually, not immediately, but we eventually, made an upside move. We took out this low here. Obviously, there's no confirmation. You don't want to short or long against the falling knife here. Trend is also to the downside, clearly. You'd be counter trading, and you can later see price does go up eventually. More examples. Here is a high, had a reversal from it. There's more smaller, not as prevalent highs, of course, in price. There's like, for example, a high here that got taken. There is a low here that got taken. We had a reaction, boom, and then mitigation continue going lower. There's also a high here that I think we barely missed right there, as you can see. The point is, liquidity is basically points, swing points where we can get nice trades and reactions and reversals off them. Ultimately, I am someone that trades reversals for the most part, but I'm trading reversals with the trend. So let's go over that real quick. We're going over internal versus external structure. All right, so internal structure. Internal structure. Actually, I'm going to save that for next video because I don't want to make each of these bootcamp videos too long. But hopefully by the end of today's video, now you understand trend. You understand what bullish and bearish trends mean, how to identify them on a rough scale. Theoretically, use the line thing to your advantage if you can't identify a trend properly. And you should now understand and identify like lower highs, lower lows. Higher low, higher high. Break to the upside. BOS, just examples. So again, there's another thing I do call this an advanced course. So for the advanced course members, you might be watching, you might be questioning why I call this a BOS. Just ignore this. It's just basically simplify it for the beginners out here watching. So yeah, I'll see you guys in episode 3 of the bootcamp, where we will talk about liquidity and internal and external structure.